Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of November, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the second week of November. And unlike the other major pairs, the precious metal has stalled after 3 weeks of bullish move and breakout, and it has pulled back to retest at the 1975 and consolidated for the week. While dollar yen, after months of bullish move, has now made a more significant retracement, and after breaking above 150, pulling back below that, heading towards 149. And all due to recent central bank decisions. We have, of course, the Federal Reserve on Wednesday. That was the key one. And then the non-farm payroll report, the jobs report from the US on the Friday, which came out weaker than expected, and which helped to push the US dollar down. So let's review last week's major drivers and look forward to this week, what the news events will be. Well, first off, for last week was the Bank of Japan, and they did not make any major decisions and left basically everything unchanged and just minor tweaks in the yield curves. So overall, it was pretty dovish for the Japanese yen. However, the US dollar was weaker after the Fed's decision and also the non-farm payroll report. So that weakened the US dollar against the Japanese yen. So that helped to push the Japanese yen up, even though Bank of Japan didn't help it at all. And on Wednesday, the Fed's decision was no surprise, no change, and it was basically another pause and stayed neutral. However, they did indicate that the next meeting in December, they could pause as well. So there's a hint that there's possibly no further rate hikes. There could be a pause for quite a while, and perhaps until the middle of next year. So the market took advantage of that news and weakened the US dollar as well. Then the Bank of England also maintained rates and didn't change, voted to stay it is, but however, it was possibly seen as a hawkish pause with potential of possible hikes if necessary, and no immediate outlook for any rate cuts. So the governor is not ready to loosen their monetary policy yet. And then on Friday's non-farm payroll report, the jobs added was lower than expected, quite significantly lower than expected, and this could be a sign of jobs market finally cooling off, and the effects of the tightening perhaps starting to show in the months to come as well. So this pushed the US dollar lower and pushed all the other majors back up after weakening for quite a while. So we'll see what happens with the RBA this Tuesday, as they are expected to increase rate after holding for 3 months now. And they're expected to increase rate as they try to try to tame inflation. And no other major news with the UK GDP is going to be flat. And then late on Friday, there's the US preliminary University of Michigan's consumer sentiment figure, expect to be slightly lower than expected. So no major news for the US this week. So we'll need to watch out for the price action on the US dollar, and then how it impacts on the other major pairs. And the only central bank this week is just the RBA. And don't forget, over this weekend, the US daylight saving time has ended. Clocks will move back 1 hour. So that will affect the charts as well, your 1 hour and your 4 hour timing. Okay, so let's move back to the analysis. So here's spot gold. And after last week, this attempt to break above 2000, it has a pullback and pull back into the 1975 support zone. Managed to bounce back up after the Federal Reserve's announcement, but on Friday could not extend its breakout above the 2000, so pull back and consolidated for the week. So let's see what this consolidation is going to be like. It's in a triangle here. And if we take a look on the time frame, it did manage to retest and find support 1975, but however still close the bearish body. So there could be further consolidation this week, as there's no major news events, and all depend on the US dollar price action. But now this major resistance is still there at 162 fib extension, and support zone still going to be at 1950 and just near this low wick, recent low. You could add an interim support at 1975. And we still have a recent high. It could be an interim resistance. All right, so let's see how this plays out this week, whether support will hold or whether it's going to attempt to break above 2000 again. So it all depends on the US dollar price action this week, with some retracement And we'll see whether there's further consolidation for this week as well, until another week where it's gets closer to the apex of this triangle and attempts to break out either way. Okay, let's also take a quick look on the weekly time frame. Yeah, it's still difficult to gauge, as it's within the previous week's body or range, and it's in Harami. But for now, it's likely going to consolidate and perhaps stay within range here for the week as it gets further into the week. Right. So we'll compare this with US dollar index, and it may not correlate as well as with the euro dollar, because there could be because of the pause in the flight to safety and the safe haven. So it really depends on whether the geopolitical situation has cooled off for now and stabilized, or stayed neutral. But let's see what the US dollar index looks like. And here's the US dollar index, where after they push up to try to break out above the upper channel trend line, just as the inverse case with the euro, where it dipped lower. Then a gap down on the Thursday and followed through weaker throughout the end of the week, with the Friday's jobs report, and a strong move down to break the daily, to break not just the 50-pip retracement, but also the lower channel trend line. So we'll see if this is going to continue its bearish momentum and target the daily 200 EMA. Needs to climb back up and above the daily 55 if it's going to recover and just consolidate. Let's also take a look on the weekly time frame. And that's a very bearish engulfing candle, just like the opposite bullish engulfing for the euro. And let's see if it continues on down to the 104 level and below. So if it gets back down to 104, there's the rising 200 EMA, adding some support as well. This resistance, we could still leave it there, or we could leave it at this recent high, bring the support down, to 104 and just below to the daily 200 as well. And this could be an interim support area. Okay, if it does break the day 200, means it's going to target the 78.6 retracement, similar to the euro as well. All right, so it's not unusual since it's already peaked near the 107 after climbing up for a couple of months and now retracing back down lower. Okay, let's move back to the analysis. Let's move on to dollar against Japanese yen. And after months and of a bullish move, it has crossed above 150. And then especially on the Tuesday with the Bank of Japan's decision, and the Japanese yen weakened as they did not make any major change or announcements. So dollar took advantage, but after that, with the Federal Reserve's announcements and then the end of the week non-farm payroll report, started to retrace back down, heading back towards the 149 interim support. We can move this down as to 148, which is the 138 fib retracement as interim support, and move this lower major support at the just above the 147. And major resistance is still at the 152. Did attempt to get close to that. So intermediate resistance is now back down to the 150. So it looks like its momentum could continue down to the daily 55 EMA, where the 148 is, and the 138 fib retracement. Let's also take a look on the weekly time frame. And that is closed as a long wick doji here, a long upper wick. And we'll see which way it's going to hit to. It's likely just going to consolidate for another week before any breakout or breakdown. So it could just consolidate within this range for another week until it breaks out one way or the other. And we'll see how the correlation is with the US dollar index, because that's going to be the main price action for this week with no major news from the US and for Japan. All right. So do check out my other videos on the other major pairs and have a safe week and a good trading week, and cheers for now.